All right, what's up, guys? Hold on. I'm gonna see. Can anyone hear me? Why is this not transitioning over? Let's go live. Why are we not going live? There we go. All right, what's up, guys? All right, there's a little bit of a delay that I'm gonna have to get used to, but for now, I'm just going to start. Let me just post on Twitter real quick, and then we will get going. All right, guys. So super basic. If you have any questions, by the way, you can type them right into the YouTube chat on the side, and I'll go over that. Right now, what I'm looking at is I'm looking at the SPY daily chart. The reason why is that's where we're going to find our initial long-term buy trend line. You can also use the weekly chart, but because SPX is in this kind of parabolic movement right now, we're going to look at it a little bit differently, and we're just going to look at the daily chart to start. So super simple here. We're going to be taking this bottom wick off of this candle, attaching it to this cluster over here, attaching the bottom wicks, and we're going to form our trend line based off that, since it looks like that is the trend it's been respecting since November. It did form another trend line higher than this, but it broke out of that trend line, formed this new trend, and that's what we're basing off of now. So what we can see is today we actually broke below this major trend line. So that is why you're seeing on the flow, if you guys look at option order flow, that's why you're seeing this this inflow of SPY puts coming into the option order flow. It seems like people are preparing for this to come back down. I would give it a target of, so my initial target is 4541.57 or 4,541 and 57 cents. That's going to be my initial target, and then after that, I'm looking for 4,500 flat, basically. I think that SPY has a lot more room to come down. There are some people that are saying, such as Morgan Stanley, that we could be seeing a 20% correction. A 20% correction would bring us back down to around 3,600. So I'm being a bear trader. I'm hoping that does happen, but at the same time, for my long-term port, I'm hoping that doesn't happen. So what I'm going to do now is I'm actually going to go off the daily chart. We're going to keep an eye on this trend line for now, and we're going to look at our 2-hour chart. The reason why I'm pulling up the 2-hour chart is this is usually the highest time frame I like to look at when I am trading during the day, actually live trading. Typically, my charts will go, I'll have 3 charts across on the same stock. I'll do a 3-minute chart, a 15-minute chart, and a 45-minute chart, always looking back at the 2-hour chart. So what we can see on the 2-hour chart a little bit more clearly is that we dropped out of this major trend line. We tested a support level of mine at 45.72, and then we actually came back up and retested that uptrend, the bottom side of that uptrend, which is a great thing for bear traders because it gives confirmation of the move down. Typically what we can see happen in these bull markets is we can see something like this happen and then it jumps right back in to the uptrend. But based off of the wick structure over here, we can see that there's a heavy wick down over here, heavy wick down over here. This is a pretty strong wick up, but it's still on a red candle, so it's not giving me any fear of momentum upwards. This wick down is showing that buyers are getting eaten up, and it's forcing the stock further down. We can see slight consolidation happening over here too, which could just be a consolidation before another move down or possibly a move up if SPY decides to recover, which I don't think it will with the Fed news we've been receiving the past couple of days. Not only that, but we also filled a gap that was established on December 20th and 21st. So we fully filled this gap now. I'm going to, like that. Fully filled that gap now. We've actually broken below it. So that's no longer a worry in terms of it's not going to fill this gap for the bulls. So I'm actually going to take away this box now. So what I'm looking at for tomorrow is if SPY or if SPX could get below 45.72.61, I'm trying to see if it can make its way down to 45.41.57. A move like that, we could actually see some decent move on these contracts. The SPX contracts tend to move a lot quicker and a lot heavier than the SPY contracts. That's why we've chosen to trade them lately, as we've been seeing really big moves in SPY. So as long as you're, excuse me, as long as you're grabbing a far out enough contract, you're healthy enough to keep holding. So initially, me and my team, we scaled into SPY puts at this blue line over here at 47.43. We got those 4,700 puts. I ended up selling early, which is what I always do for some reason. And SPY continued downward. So what we are looking at now, and what I'm going to go further into with this analysis, is I'm going to pull up the 45-minute chart, because the 45-minute chart gives me a better picture. So based off the 45-minute chart, we can see the confirmation of this head and shoulders. So some people will call this a dynamic head and shoulders. I'm actually going to take away this trend line right here. Give me one sec. That trend line, and I'm going to bring up a different trend line that I had drawn out before. Let me just find it. There we go. Okay, this was a trend line I was looking at on the 45-minute chart because it's a little bit tighter than our daily one. Our daily trend line doesn't touch these 2 points, so I'm going based off the 45-minute here. On the 45-minute, we can see a clean break out of this downtrend, this uptrend, a test of our level, comes back up, retests our 4,600 level and the bottom side of our uptrend and continues downward, giving us confirmation that this should continue further down. Here's a head and shoulders pattern that was formed before. We've fully broken out of the neckline now. The reason why I had this 4,600 level marked out is people were saying this was the neckline. Other people were saying that 45.83 was the neckline. And then other people were saying that it was a dynamic neckline, which is this downtrend line. So if the people who are, right now everyone's correct, right? So if the people who believe that this is the neckline, this dynamic support, then we should be able to see that 45.41 that I am looking for. After 45.41, we'll be looking for that 45.29 and then 4,500 flat before we can start filling all these tiny gaps down here. So one thing I like to say is SPY typically fills all its gaps. There hasn't really been a gap in history on the SPX that has not been filled if it's noticeable on a 45-minute chart or even on a daily chart. I hate that I can't drag this thing over. So right now we have this gap to fill right here, which could be a target for some people. We partially filled it a bit over there, but that's not a worry because we have another gap that needs to be filled. This one, you could count this one over here, this gap over here. I'm not going to because we already filled it over there, so I don't want people to expect a gap fill when there's not going to be one, because that gap was already filled. I have a rule that once gaps fill at least 40% of the gap, that's all it has to fill. It doesn't have to fill anything more than that. So this is still a gap that needs to be even partially filled. We're looking for 40% on it, which would be around that 43.90 level. So that's going to be my ultimate target on SPX. For now, I would say that would be all the way out until I would base it off of a different trend line. So if I take away my brush strokes, and I bring back, nope, that downtrend. This is the downtrend I'm going to be paying attention to most heavily. It's kind of sharp, which is why I'm not a huge fan of it. I think that's too direct of a downtrend for SPY. That would be way too sharp of a decline. It would be way too scary. But what I could see happening, and this is weird, is I could see something forming like a descending wedge over here, like this falling down to here, catching, and then we form a descending wedge somehow. But right now we can't even see that happening. That's just an image I have forming in my head. Really what I would like to see happen is I would like to see SPY recover at least a little bit. I'd like to see it bounce off of that 45, 41 level, come back up to this 4,600 level, and then continue its time down before we can reach our target of 4,400. That's the bear case for this. Another reason why Morgan Stanley is saying that 3,600 is a target on SPX. Again, no SPY gap goes unfilled. Here's another gap that has to get filled all the way down at 4,000. Which is a scary level to even think about. Like a really scary level to even think about. We haven't been back down to 4,000 since March of 2021, almost a full year ago. I'm not even going to get into the politics of this, but the Biden administration has been handling the supply chain problem and inflation fairly poorly, which is why we're seeing this sharp downturn. The Fed isn't buying any more assets, which means they're not pumping any more money into the market, which could be another reason for us continuing down. They said they're going to completely stop buying assets starting in February. So I'm expecting once February to start for this to really start getting ugly for us in SPY. Again, Morgan Stanley has that 20% decline at 3,600 or 3,650, which would be a pretty heavy support. It's crazy that they say that because right here is 3,600. And they're just saying 20%, and this would be about 20%. That thick line all the way down there. Other than that, let me go to a smaller time frame. I'm actually going to pull up ES so we can see what SPY or what the S&P is doing in the after hours right now. So in the after hours, it looks like we broke below a major support of ours. Pull up the 45-minute. Yep, so ES is already reaching that pretty ugly zone that we don't want to be in. You can see that ES, if we look at the equivalent of SPY and ES, we're almost at that level. This was that SPY choppiness that happened a bit back. So really what we need is the major level on ES to break below is this I'm going to say 45.50. 45.50 level. If we get below that, you can see it gets a little ugly around here in terms of bulls and bears fighting it out. But if we can break below there and hold on the 2 hour, we should continue our way down and make it to that target that we have on our SPX. Other than that, do you guys have any stocks you would like me to go over? So where's the money flowing into? Okay, so if we're talking about just like pure money flow of what institutions are doing right now and like where the money is going. So, so with inflation being as high as it is, people are putting their money into more risky assets. So, excuse me, sorry. There is a bull case for the stock market as people decide, hey, do I want to put my money into the bank where it's only going to make 2% and then with inflation I'm actually making a negative percentage on my money, or am I going to put it into stocks that could possibly increase over time, or am I going to put it into dividend stocks that will pay me out a yield per year and could go up over time? Where should I put my money? So right now I see the money flowing into other assets such as crypto. I see it flowing into real estate. I see a lot of money going into harder assets that aren't necessarily the bank or into stocks. What we can see right now is with SPX and QQQ is that a lot of money is flowing out of tech after the run up that tech has had. I still think that tech is going to have an amazing year, but right now tech has been so inflated by everyone being like, oh, all these awesome tech stocks, let's buy some of them, right? I was in Apple puts today. I don't think Apple should be priced where it is right now. The iPhone isn't performing as well as it did before in terms of sales, so why are they ticking higher and higher when they haven't really innovated anything? And, you know, I still have an iPhone, but I just switched from, well, not switched, I just got a second phone and it's an Android. And the Android is, I can say, significantly better than the Apple phone, which gives me even more of a reason to say that Apple does not deserve the price that it currently has. Once people start realizing the parts of the competitor that they can use for work and other sorts, then they're going to start moving away from Apple more and more. You know, Tesla's coming out with the Pi phone. Apple's going to get many more competitors as time goes on. And they're not just an iPhone company, they're a tech company. But the Apple car I see is a waste of money. I don't see many people using it. I think money's going to start flowing out of tech a little bit more and into industrials. Usually industrials do pretty well during inflation, and utilities and energy. So you're going to see a lot of money flowing into oil stocks and utility stocks because as inflation goes up, Dodgy, I swear to God, Android is so much better. As inflation goes up, the price of utilities go up alongside it. So those are typically the stocks that people look at during inflation. Yeah, those Apple puts definitely went up. I got in at 159. I ended up selling at 149. I had 400 contracts. I ended up taking a $4,000 loss, and they closed today at 230. I could actually show you guys my Apple Play if you guys want to see it. My Apple Play was pretty clear. So I got in Apple 170 puts. Where is it? I got into Apple 170 puts here at 170.73. And then because I thought it was going to keep crashing, it did not. It came back up, retested one of my levels. I actually averaged down around here, and then it broke higher, and I got scared. But when it retested my level here, I averaged down again. It came down. I sold right there. There was my average right at the bottom of that wick. Once this wicked back up, I was like, okay, this thing is not coming back down anymore. Came up, shot right back down, and my contracts went to heaven, and I was out of them. Oh, William Africa Secret. Okay, hey Chase. Yeah, Dodgy, I don't disagree with you that most teenagers are getting iPhones, but just wait. Like, you know, I had an iPhone my entire life, never thought about using anything different, and then I got the Galaxy Z Fold 3, and this thing's 1,000 times better. Other than that, I'm going to go over another tool I use for trading, especially for SPX. This is a great indicator called the Nessie indicator. It's an indicator by Omnitech Algos. There's a referral link in my link tree if you guys want it. But basically, this is going to give you the major orders coming in on SPX. You guys can see catches tops pretty easily. So it's not like a support and resistance algo. You're more selling while you're in this green and blue zone and buying while you're in the red zone. It works more like a supply and demand type thing. And then the line is getting retraced by major orders. So when something breaks over Nessie like this, you're supposed to go long and use Nessie as a stop loss. When it breaks below, you enter a short and use the Nessie line as your stop loss. Here you could see it paid. You would have gotten stopped out here for a minimal loss, right? You possibly could have even made a gain and sold early, but then you sold here, you're still holding, you're using that as your stop loss. Hits again, you might not even average down here. You might have already been out, but this thing snipes. Once it retraces, sell again if you want to. Wait for that bounce. You can hop back in if you want. Momentum is still going to lead down as long as these keep retracing downwards. On top of that, what we're going to use is the Omniband's deviation. Oh, sorry. Hold on. Let me just do this. So this is the typical setup I use when I'm trading. I have this, it's called a QQE crossover on the bottom. I'll go over one by one. So basically when you get these blue dots, that's a bearish cross. When you get these green dots, that's a bullish cross. You don't base entries off of that though. You base entries based off of, okay, this just retested my level, right? I have a line there that's signifying my level. It broke down and I got a blue line. Okay, that's a double confirmation. I can enter the play. But what Omnibands are going to do for you is they're going to work alongside Nessie. So I'm going to take away all the other indicators, such as the trauma line and the VWAP. And you're going to be left with Nessie and then these funky lines over here. So these lines are going to work as your, basically, let's say you entered a short on SPX after it broke down below Nessie over here. You're going to stay in that play as long as it's below this short VWAP. That's what we're going to call it. Short VWAP, long VWAP, right? Because that's what they are. They're just not the same type of VWAP. So you're going to stay in the play as long as it's below VWAP, right? Broke above, you get out, comes back below. You can get back in if you want. Really, I like playing the breaks sometimes of the Omnibands, but they're a little dangerous. Retest, breaks below, you're still in the play, retest, and bam. Once you get below that white Omniband, you are in the clear. As long as it is below that, this thing is going to keep going down. These things are basically going to determine trend for you. So the yellow one is the shorter time frame, the white one's the larger time frame. So as long as you're below that white one, you're going to continue downward. As you're above it, you're going to continue upward. But for now, we are below it on the 3 minute. Let's check the 7 minute. I love the 7 minute chart. We are below it on the 7 minute. Let's check the 15 minute. We are heavily below it on the 15 minute. You can even see that you can get in on the retest when it retests that long VWAP, because it's going to come right back down afterwards. Now what we're looking for is we're looking for this to come right back up to the VWAP eventually and then come back down. That's the move we're looking for. We're looking for this thing to, and right now it's balancing right on our trend line. So we're looking for that thing to come right back up to that downtrend, retest, and then we can enter those puts again. Right now we don't know when to enter calls, right? Because the momentum is not in our favor. So we can't just force ourselves into calls hoping that it's going to come back up, because it could keep coming down and then, we get a little pop and it'll touch that VWAP. But that's really it. These indicators are the best indicators I've ever used. I highly recommend using them. AI Links, the guy who designed them, has a ton of videos to help you guys use them. Chase, the one on the bot, what do you mean the algo catches big orders? So the algo uses a API system which will catch large orders coming through to the market. So large orders are like block orders or dark pools, or when literally just a lot of volume into one candle, right? That's going to be a large order, right? Or a big order. It might not be one person, but a lot of people are buying at one level, which means that it's a level we have to respect. And you could see that it respects them pretty well. And another thing on top of that is you could actually take the levels and you can mark them off if you want to with Nessie, and you can use them for, like this blue line. I could make a line on that, like an actual horizontal line, and make it go all the way across, and this will still get respected. So you can use Nessie to make your support and resistance lines for the future. I don't, but you can, and it will be just as effective. Yeah. Do you guys want me to go over any other stocks while we're at it? Because kind of went over everything on SPX over here. Also, I recommend using VWAP. Like, everyone should use VWAP. I've been trying to use a VWMA lately, which is a volume-weighted moving average. I don't necessarily understand the difference between that and a VWAP, but they are different. I do recommend using a VWAP though whenever you guys are trading. Usually a price isn't going to go too far above or too far below VWAP before retesting it, so you're chasing if it's really far away. And you guys can even see that the move typically happens at the beginning of the day or the end of the day, and then we come back down to here. 3 minutes better. Yeah. So, you guys could play VWAP as much as you want. Test VWAP, buy puts. Goes a little too far away, sell at your level. You got to have your levels marked out. But if you could literally just trade with VWAP all you want. Someone asked for QQQ. Okay, let me pull up QQQ. QQQ is going to look very similar to SPY. It's going to look very similar. Let's do exactly what we did last time. We're going to go to the 2 hour first. Let me remove drawings. All right, let's start on the 2 hour. Let's get our trend line going. This is going to be very similar to SPY. We're just going to see if, yeah, it broke out of its uptrend as well. this thing just broke fucking everything. Sorry, I didn't mean to curse. I'm supposed to say, like, kid-friendly on fucking this shit. Wow, this is terrible. I don't even like that trend line. I'm not going to use that. This is more the trend. Yeah. Yeah, this seems like the trend channel we're traveling in for QQQ right now. So basically what you guys are going to see me do is I just cloned the trend line to give it the same rate of change as, so I could just make a clean channel. So based on this, it looks like QQQ could come, again, QQQ has this gap. There's this big gap right here. Big gap. That gap still has to be filled. We broke below this support. Let's just get some support and resistance lines going. Why not? We broke this support. Oh, God damn, this thing so close to dying. 369.14 seems like our level to break. We get below that. Below 369.14, we go to 365.67. Below that, we go to 359.96. And below that, we go to 351.91. That's my personal opinion on QQQ. Okay, wait, someone asked for QQQ. For VWAP, if you need to use the E-mini or SPY, you can't buy SPX. There's no volume. I disagree with that statement because I use VWAP on SPX and not E-mini or SPY. It works on SPX the same way. There's still volume that goes into SPX. You could look at SPX and see the volume on SPX. QQQ, just a QQQ. QQQ also has super heavy dark pools that pretty much always get respected. Very easy to trade it. Yeah, QQQ does have some really nice dark pools. SPY doesn't respect his dark pools as much. But other than that, do you guys want me to go over anything else? Because I could keep going. You know, QQQ is this is pretty much all the TA you could do on QQQ. You know, you could get we could get another resistance line right around. Yeah. It's more like that. It's more like this. Yeah, there's another one there. All right, that's basically all your support and resistance on QQQ. Do you guys want me to do any other charts while I'm still on? You know, Lucid was pretty fun today. What was the QQE indicator I had? So I'll show you QQE. QQE is an awesome indicator. It's actually a free indicator on It's a free indicator on TradingView. It's called QQE MT4 Glass modified by Just Uncle. It's going to look something like this. You got to go in and you got to go to your settings and you're going to show the first one, RSI QQE signal cross. Pretty sure that's what I have. Yep. So this is going to give you, one of them is an RSI, and one of them is the QQE, which I don't know what QQE stands for. But you're looking for these blue and green dots. Those crosses are what you're looking for. You're not going to enter when they do cross. You're using them as like further confirmation to stay in the play. Uh, 22 Torino, that's awesome that you have 850 puts on QQQ? I mean, 350 puts? Or 850? How do you have 850 puts? 850? 350? 350 puts. Probably 350 puts. Yeah, QQE is pretty dope. You know, it just gives me further confirmation. Other than that, what other tickers do you guys want me to look at? I like playing Lucid a lot too. Lucid's a fun ticker. Really right now, just market sentiments can be ass. Like absolutely terrible. I kind of wish I could show you guys my black box stocks, but I can't because it's on my other computer. But if you look at black box stocks today, there wasn't a single call that came into SPY. After like there were like literally like what 175 puts to 17 calls on SPY. Just so you guys know. So 175 to 17 favoring the put side. It's pretty scary. With a dark pool printing late in the day around 456.67 leading to more downside. Oof. All right, guys. If I hope a lot of you enjoyed stream. I think I'm gonna end it here. Next time I'll make sure I go like a little bit more structured with the stream, but I was just happy to get something out for you guys. Subscribe to RMB or join the server. I'm probably gonna do this in free VC a couple more times because it's just easier in there. I had to go through so much shit to set this up on YouTube. But shoot me a DM if you guys have any questions. Instagram works, or Twitter, or even on Discord. Shoot me a DM, and if you want me to go over something in the next video, or you want me to make a TikTok about something, you want me to post something on Twitter, go over any charts, I can do that for you guys. I'm not doing much else this week. So whatever you guys need, I got you. Other than that, enjoy the rest of your nights, and I will see you guys at Market Open tomorrow in the boiler room and the RMB server. Have a good one, guys.